Thank you, Monica. Good afternoon, good morning, and good evening, ladies and gentlemen. Thank you for staying with us in this webinar, an outreach event on this very interesting and important topic, sustainability reporting. Shortly, we will begin the panel discussion session. My name is Indra, and I will be the moderator for this session. With the publication of the exposure drafts of IFRS Sustainability Disclosure Standards, IFRS S1 and S2, it seems that the global baseline sustainability reporting standard is just around the corner. Yet, we might be interested to understand how will the proposed standards change the way companies report its sustainability reported matters, or the way investors and finance providers allocate capital or provide financing? Are there contentious matters on the proposed standards? What are challenges that the companies might encounter in preparing sustainability report? How the standard setter view potential application issues that may arise upon early years of implementation of this upcoming standard? Ladies and gentlemen, we are pleased to have with us distinguished panelists today, and I'm sure they need no introduction. Nonetheless, let me invite our panelists. First one, Lloyd. She's the Vice Chair of the ISSB, International Sustainability Standards Board. Previously, she was the Vice Chair of the IASB and also the Chair of the IFRS Interpretation Committee. The second panelist is Bu Nawal Nelly. She is the Deputy Minister on Finance and Risk Management in Ministry of State-Owned Enterprises. And the third panelist is Ibu Vera Ivlim, the CFO of BCA, one of the largest banks in Indonesia, and also Vice Chair on Economy and Banking Research of Indonesian Banks Association, or Perbanas. Welcome, distinguished ladies. Let's hear the insights and views from the standard setter and preparers/users on sustainability reporting standard. So I think without further ado, I'll start with Ibu Nawal, if I may. So Ibu Nawal, in your capacity of overseeing the state-owned enterprises, perhaps it is more than 100, in various industry, question would be, what is your overall response to the proposed IFRS sustainability standards, which I think will change the way companies disclose sustainability-related matters, perhaps from a somewhat nice-to-have report or information into a more substantive and internally consistent disclosure, which focuses on impact of risk and opportunities of sustainability reported matters towards enterprise value. What is your overall response on these proposed standards?
Thank you, Pa Indra, for the first opportunity to share our thoughts. Generally, the Ministry of State-Owned Enterprises, we're very supportive of this initiative. As you're probably aware, we're a portfolio of some 42 SOEs now, with portfolio assets circa 620 billion-ish, which comprises circa 60%, close to 60% of Indonesia's GDP. We genuinely believe that this is an important first step towards consolidating the financial reporting and the sustainability and climate disclosure, and synchronizing both the timing and the status of whether it's mandatory or voluntary, what to consider as materiality, threshold for reporting, what's the frequency of reporting. We come from the hat of a broader stakeholder than just an investor stakeholder. So our view is we're very supportive of this. SOE's mandates are first and foremost is actually to act as agent of development, and being agent of development without the word sustainability in it, it doesn't sound anything. Yeah. So financial and sustainability is an integrated reporting. We're relieved actually for this initiative because we're faced by multiple set of regulation, because we have listed SOEs, we have private SOEs. Not all of them are regulated under OJK. Some of them are in different legal form. So something that is issued by broad standard setting like the ISSB and ISAB is actually a welcome solution to standardize this reporting.
Okay, so I think you are in overall supporting this initiative then perhaps the next question for you. So we heard about greenwashing, right? So what do you think about these proposed standards? Do you think this will alleviate greenwashing because it will offer more structured and integrated metrics, for example, and they need to be consistent with information in the financial statements and in the sustainability reports? What do you think about this one? Do you think that this proposed standard will alleviate greenwashing in terms of sustainability reports?
I think the fact that it is structured around a standardized body to set the standard that is independent, yeah, and the fact that the process also will require an audit or a review process on those standards will significantly reduce the possibility of greenwashing. But I have to sort of like be what do you call it, cognizant that this is all new. Even the standards that we are proposing, it will still be subject of judgments and interpretation, similar to that of the financial number. So my broad comment, and I'll be cautious, is that this initiative will reduce greenwashing, but it's the continuous exercise of reviewing, scrutinized by the market, etc., and by regulators, that will significantly improve the reporting standard. We've gone through the financial reporting, we've gone through this process as well. Financial shenanigans and everything over the history, there is that situation where people loosely interpret the standards but without standard it's even worse. With the standard it's better. But the standard alone is not enough. You have to have the entire ecosystem to help you get greater confidence on the reports that is produced. I hope that answers the question.
Yeah. Thank you, Bu Nawal. I think I'll move on to Bu Fera then. You are coming from a finance provider's background, right? So question for you would be, what do you think? Will the IFRS sustainability standards affect the allocation of capital and lending decision of banks in Indonesia? And if so, do you think how immediate this impact will be?
Thank you. Good afternoon, Pak Indra. And good afternoon also, Ibu Nelly. Long time no see, and good afternoon, Leon. Definitely, I think one day in future, capital allocation might be impacted. So today, banking for capital allocation is highly regulated and it's under OJK, Financial Services Authority, and it's also based on the Basel framework. And for risk-weighted capital allocation, it might change in future, to which incorporated the element of ESG. That's, I think, it can happen. But I think at this point in time, I think for the lending, it's definitely, I think, it's important. I think the lending decision is still based on the creditworthiness of the customer. That's, I think, are most important. Because for banking sector, maintaining prudential banking principle is utmost important. No matter how good is a sector, when the customer go to NPL, it is not everyone expected, and it will take up the capital substantially. So for banking business today, I think like for BCA, we are a listed bank. We disclose also openly to the investor as part of our quarterly public exposure to update our investor, including the media. We disclose also several continue updating our lending policy, including such as illegal lodging activity. We are I think the lending policy is restricted to many areas, and we disclose that, I think, openly to public. It can be accessed or read to our website. And I think I heard a lot about the sustainability reporting shared by Layard and also the GRI. Today we have standard actually, and sustainability report is not new for banking, for banks especially. And we have started this, I think, about almost 5 years by now. We follow GRI standard. And I must say today, we are faced or bound with multiple standard and frameworks. And it's quite burden for the industry because more and more also, I think audiences, rating agency, or raising expectation on ESG. Definitely, I think it is important for industry to be provided. I think one policy that combine any interest, but I think when it comes to sustainability reporting, I think I will look for, I think, more efficient way to provide the reports. Banks like us today, this year, we just started to collect database because ESG is a journey, and sustainable reporting is also a journey. So it cannot be fixed overnight. This year, we just started to build the database. And starting this year, we start to introduce what we call ISRA. This is also governed under OJK, Environment Social Risk Assessment to our debtors. And this is not easy because it takes time, I think, for both parties, between us, the banks, and the customer to understand the requirement, to understand, because the sector that we finance is very broad. And there is no one size fit all to the all sector. So I think, again, this is a journey.
Yeah. Thank you, Bu Vera, for your remarks. So if I hear clearly from you that you welcome this initiative, but of course, then you would prefer to have a kind of single or consistent framework, so that it will not put more burden on the reporters, on the companies, to prepare different sets of reporting, which perhaps are not consistent one to another.
Yeah. Don't change too fast. Don't change too much. Too many regulation, too many framework is also create a lot of confusion.
Yeah, thank you. So I'll move to Sue. Then, by the way, Sue, so I think it's an interesting journey for you, moving from financial reporting standard setter now to sustainability standard setter. Okay, I think I'll ask about the S2, Sue, particularly on the approach, because as we know, the metrics set out in the EDs of S2 are largely based on ISSB standards. And ISSB standards are not the predominant framework in most emerging economies. And some argued that some of the metrics are quite jurisdiction specific. They are coming from developed or advanced economies, perhaps not really match with the situation or condition in emerging economies. In that sense, how such approach fits the purpose of developing global baseline sustainability standards? Or in other words, how will this affect the accessibility of these proposed standards globally? What do you think of that?
Thank you very much. And yes, it is quite a journey. I feel like I'm on a very steep journey, but a very exciting one, an exciting and important one as well. And you ask a really good question, and it's one of the key things that people are talking about when I talk to them about the climate document. So maybe I'll start with sort of the case for the industry-based standards, and then I'll come back to the global acceptability point that you're raising specifically. So firstly, why do we even propose these industry-based standards as part of the climate document? And particularly if you think about my journey from the IASB, we don't really have that level of industry specificity in the accounting standards. So it is quite a big change for the IFRS Foundation. But I think there's a couple of reasons why we put this in here and supported this as a proposal. And I'll touch on those. So the first sort of relates to the conversation you were having with Nawal actually about greenwashing, which is a difficult issue. And one of the problems or one of the sort of catalysts for greenwashing being a problem is the fact that today there's a lot of choice about how you present yourself. You can choose different metrics, you can use different sets of requirements. And depending on what metrics you choose to present, you could look quite different as a company, and your risk exposures could look quite different. Now, what that means is that even if a company isn't trying to do anything, inappropriate, it makes it very hard for somebody comparing two companies to really know if, what's similar and what's different, because you're comparing different things. And so one of the benefits, I think, of what we're proposing just as a general proposition with the global baseline is by improving the transparency around the information and making it comparable between entities. Everybody should be better equipped to really understand the sort of truth, if you like, in terms of what's really going on in a company and to make valid comparisons. And the industry-based requirements are a very particular way of doing that. You sort of have nowhere to hide, because everybody in the industry should, for their key sort of metrics and statistics, be providing the same information. So that gives us the most robust basis, subject to all of the correct, observations that Noel made about assurance and all of those sorts of things. But prima facie, that specificity and comparability is the best defense we have against greenwashing. So it's really important to have that. So that's one reason they're really useful. The second is actually, interestingly, when you pick up our climate document and you see the 68 different chapters of, industry-based requirements, your first reaction is, oh my goodness, that is a lot. But if you think about it from the perspective of a company, usually they should only have, a handful of those chapters which are applicable to them. And once you narrow it down to that from a company's perspective, actually, many companies say to me, that's a very efficient and proportionate way to ask me to do my disclosures. I know exactly what to do. I know exactly what has been identified as being useful for investors. I can be confident that I'm spending my time providing information that is relevant for investment decisions. And so that actually could be an efficient process. So preparers in some cases who have used the SASB standards like that part of it. And so I think it's really important to sort of think about that as well, rather than thinking, oh my gosh, 68 chapters, that's a lot. Think of it through the preparer perspective. Maybe it's not so easy. But then getting to your global applicability point, it's a really, really good question. And that's why they're included in the exposure draft, so that we can really get feedback on this. We went through a process of trying to make sure they're more internationally applicable, and that's shown in the revisions from the SASB standards in the exposure draft. But we really need to know from you people whether or not we've captured what we need to capture to make them internationally applicable. We may well need to make changes to make them more internationally applicable, and we'd love to hear about that. So if you could give us specific feedback, that would be really helpful. Just saying they're not internationally applicable, I can't do much with, but if you can give me examples, I can help you. That's the first thing. But I think the last thing, and then I'll stop talking, the last thing I would say on the international applicability is we are very conscious of sort of proportionality and asking people to do reasonable things. Maybe it's more appropriate for us to allow a longer period of time before companies have to do the industry-specific piece of the climate document. We could start with the front and maybe think about the back being a longer time period to enable people to gather the data, change their systems and get onto that journey, because we know people are starting from different positions. And so, please give us that feedback, because we can think about that to make sure what we do is really realistic in terms of what we're asking for a global audience. So that's really important.
Yeah, thank you, Sue, for your remarks. So I think next question for you, Sue, and then I'll ask the same question to Ibu Nawal and Ibu Vera. So this is relating to specific metrics relating to greenhouse gases emission. So in the exposure draft, it requires disclosures of emission of greenhouse gases for scope 1 and 2 separately between consolidated accounting groups and associates, JVs, and consolidated subsidiaries. And in addition to that, then it requires also disclosure for scope 3 emission. And if it is not included, then there should be a kind of disclosures for reason for why they are being omitted. And on top of that, there is a requirement that this information of the sustainability disclosure should be published at the same time as the financial statements. Given all of these new requirements, I understand that you mentioned about the journey, right? Given all of these new requirements, and perhaps a measurement of, let's say, scope 3 emission is not easy thing to do. and the requirements to publish the information at the same time with the financial statements, how do you think this will promote disclosures of reliable information during its early years of application? I understand that this is a journey, but how ISSB consider these things, meaning that there are new requirements, they are expected to be published at the same time with the financial statements, and this is a kind of new journey for them, particularly for this metrics on emission. What do you think about this, Sue?
Again, another really good question. So I think I'd think about this in two different ways. And again, this is another thing that I get asked a lot. So you're picking on the really hot topics, which is excellent identification on your part. So the first is, is this the information investors need? So that's the first question we have to ask. We're proposing scope 1, 2, and scope 3 is all, really necessary to assess enterprise values. So the first question I need people to respond on is, do investors actually need this to assess enterprise value or not? So is there a benefit there? So that's one thing we want to understand better through the consultation. Then the second thing is sort of the practicality of that and the costs of that for preparers. And you are right that scope 3 can be challenging. I think one of the things to think about here is there's different pieces of scope 3. Some scope 3 information may be closer to the preparer than others. So for example, if you're a bank, you have at least, and I need to be careful not to annoy the banker on the panel here, but be careful with my choice of words. You have a direct relationship with your borrower at least, so you've got the ability to ask for information, and so that gives you a more direct route. Whereas if you're looking at, a supply chain participant that's several steps away from you, you may have less ability to get the information. So that's something we need to think about. But we also may need to be prepared for the fact that there will be a level of estimation that's required and a level of assumptions. Now, when I talk to investors about this, they've been quite clear with me to say, don't just give up because there's estimation and assumptions necessary, because it is important that we have an understanding. Tell me your number and then tell me how to be careful with that number because of the estimates and assumptions. So I'm aware and I go in with my eyes wide open about how reliable or what estimation uncertainty there is. So make that clear. But they'd rather have that than not have the information at all. I think what we will need to be careful with is thinking about the timing point. And not just on scope 3, but more generally, the proposal that we have that the sustainability report be provided at the same time as the financial statements is causing people to say, how could I do that? Because many people haven't even started the journey. And so the idea that they can get all of this information, get it through a robust process for a level of assurance and get it out at the same time as the financial statements is a big ask if you're starting your journey. So again, I think this is another area where we need to understand the practical challenges and probably think carefully about whether we need to allow perhaps a little bit more time for people to get to that line, that sort of timing. Maybe that's an aspiration that's a few years away and people need some time just to gather the information and to get used to it, for technology to develop, etc., so that we've got new means of collecting the scope 3 information. And we need to look carefully at that in the redeliberations. But I think the last thing I'll say is that I think let's be careful not to throw scope 3 out too easily. Because if I think back to my accounting days, if you think about all of the challenges we had with people taking things off balance sheet, and now you had this very incomplete picture, scope 3 could be the next off balance sheet if we're not careful. So I think the inclusivity of the scope 3 is an important consideration. And so we shouldn't give up too easily, but we do need to be realistic and proportionate.
Yeah, thank you, Sue, for clarifying that. And I think we'll need to comment on that on the exposure draft as well, whether this is applicable for us or not. Okay, so I'll move to Ibu Vera. So hearing from Sue and looking into the disclosures requirement in this proposed standard that requires companies to disclose scope 1, scope 2, and scope 3 emissions, and they are to be provided at the same time with the publication of the financial statements. Let's say if it is adopted and required in Indonesia, how do you think is the level of readiness to apply those requirements? And what are the main challenges to appropriately applying those requirements in practice? What is your view on this, Buvera?
Thank you. I agree. I think with your comment, like I think we need to be practical. And for banking sector, we finance such a broad customer segment, from corporate, SME, including small businesses. And I think talking about readiness, it is very hard to say, because even for banks today, we just started talking about even this year for BC, we start to collect how much electricity that we use, and then we start to collect and start to analyze the data. So the readiness of the industry, it cannot be done by industry itself. It has to be coordinated as well, including work together with the government. Sector by sector is a very broad, and not talking about customer segment. Data availability definitely is a challenge, and we need tools to do that. So I would say everything, I think we need to take from as a baby step first. And the coordination among regulators is also very important. Today, there are so many standards talking about the emission and so forth. So I think I would say that under today, even for banking sector, we just started to look into this area. And if you're talking about our customer, don't talk about even supply chain, such a broad supply chain, how to coordinate it. The standard is not available. I mean, the general standard that govern all the sector, all the supply chains. So again, it cannot be done by industry itself. It has to be coordinated together with the government, together with the regulators. And don't expect this is an overnight exercise.
Yeah, I think I agree with you. So you mentioned about practicality aspects, and if you are talking about scope 3, perhaps it's very difficult to measure that across your supply chain, for example, which is very broad can be. Okay, the similar question for Ibu Nawa. So we are talking about disclosure requirements on greenhouse gases, and we know that you are overseeing state-owned enterprises, including those, let's say, operating in extractive industries, plantation, and so on. And given the perceived tensions between such metrics and perhaps the developmental targets of emerging economies placed upon the SOE, how do you think SOEs will be affected by such requirement if such requirement is, let's say, applied in Indonesia?
Yeah, I think this is, again, is a journey for us as well. Yeah, we do have a commitment through our NDC to comply with COP26 requirements. And we as a country are genuinely committed to that. Our largest SOE who are in the extractive industry and energy, they are actively pursuing energy transition mechanics to help really address the climate issues, not only from the reporting aspect, but also from the actual execution of their plan. So we've issued an integrated planning for PLN, for example, that is very progressive in meeting the NDC targets. We're going to issue regulations around compliance towards coal and carbon emissions. Yeah. So apart from the reporting standard, as a country, we're committed to that initiative. On the reporting aspect of this, I have to agree with Sue and Vera as well on practicality considerations. Yeah, because it's an infrastructure that needs to be developed not only from the producing entities, but also from the supply chain that feeds into the corporation. That being said, this is I take Sue's view. It's better to start, yeah, than not to start because it's difficult to measure. And our position is that this is part of externalities, the cost of doing business that is not measured by the numbers, yeah, You call it off balance sheet, the economists call it externalities, the damage towards the environment that you cannot quantify because it's just too difficult to quantify. We as the world had an excuse for the last 20 years. I don't think we have an excuse now. And I think we should start from this point onward. I think OJK is actually very progressive. They started doing and mandating this from 2017. The disclosure on sustainability reporting. But OJK alone, not all of my companies are compliant with OJK. So it needs to be a broader umbrella, and it needs to have the uniformity that that readers of financial statement are so used to. So if you sort of like measure liabilities off and on disclosure and not disclosed, there is a bit of a practice that has been tested over time to make sure that people consistently, year in, year out, report those. And that ecosystem is the standard setter, the auditors, and the preparers. This ecosystem needs to be established, but please baby steps, because it's not just like with the click of a button you can do it. The infrastructure behind it need to be what they call it, prepare. It need to be readied for this, for it to be meaningful as well. Because if it's coming from a bad source or an unreliable source, it's equally useless. So I take the view we shouldn't be discouraged just because it's difficult. We should start, and this is a good starting point. Yeah. And emerging and developing, I think this is a very unique situation in where we almost are in the same starting point, because even for developed world, this is not an easy standard to be swallowed. Yeah. So we're not that far off. I know we do have a lot of things to do under the infrastructure of reporting, but even the developed world also are still contemplating on these reporting standards. So probably I've already spoken outside of the scope of your question, but I echo the spirit. We have to start somewhere, be cognizant of the infrastructure that we have, and let the process move forward. It's better than not to have anything at all, genuinely, at this stage of global environmental situation. I'll pause here, Indra.
Yeah, thank you, Budala. I think it's very encouraging remarks from you. Okay, so I think last question for you. In terms of the requirements in the proposed standards, it says that a company should disclose information on significant sustainability-related risks and opportunities and its impact on enterprise value. But significant, it seems, not defined in the proposed standards, and perhaps preparers, users, or practitioners might have different views on what is considered significant. Question will be, in developing the EDs, how ISSB considered practical aspects of this application, as it might be a judgmental matter to determine whether this is significant or not.
That question to me or to whom? Sorry.
To Sue. Sorry, this is for you, Sue.
Yeah.
Okay.
That's okay. Yes. Yeah. So again, a good question that comes up quite a lot. So I'll tell you the logic for the reason why we included the word significant, and then we can think about whether it was a good word to choose, but maybe it's useful to know sort of the intention as a starting point. When we worked on the prototype documents with the Technical Readiness Working Group before COP26, we had the opportunity to do some limited outreach with some stakeholders to get an idea of feedback on the documents and their operationality, etc. And when we did that outreach, we didn't have the word significant in there. It just said you needed to provide information on all of the sustainability risks and opportunities. And that led to a concern from companies that we spoke to, that sounded like we were asking them to do an exhaustive search for every possible sustainability risk they could imagine and provide information about all of that. And our response was, of course we don't mean that, because we only ever want you to provide information about the stuff that could really influence investor decisions. But it was apparent to us in that discussion that we needed to provide both a signal and a level of comfort to companies that we were really only wanting them to think about the sustainability risks and opportunities that were really important in terms of risks and opportunities to their business that could really influence sort of the outcomes of their profitability, et cetera, in the future, and to give them confidence that that was the case. And so we included the word significant for that purpose, to provide reassurance that don't worry about the little stuff. Of course, think about the big issues, and then think about the material information about those things. So that's why we included the word. Now, we chose the word significant, and perhaps it wasn't the best choice of word in the world. I'll acknowledge that. As you know, as a drafter, maybe I should have known better. I think one of the challenges with the word significant is that it is used in a different way in IFRS accounting standards with particular meanings, and people are thinking that we mean that because it's the IFRS foundation, and that's a fair starting assumption. It's good people are being so thoughtful. So maybe we need to change the word. But I do think we do need a word still to sort of, well, maybe we don't need any word. Maybe people are comfortable that because ultimately we just ask for material information, that's enough. But personally, my sense is I still think that there's a good thing for companies to sort of start off saying, look, only think about the important stuff and then think about the material information. But I need better words that mean important stuff. And so if you've got a suggestion for something better than significant when you write back to us, I think that would be something we'd be interested in.
Okay, thank you, Sue, for clarifying that. So perhaps for lack of better words, then now you propose to use the word significant, but of course, it's open for comments for all of you. So if you can find better words to describe what has explained by Sue, so of course, comments are welcome by the ISSB. Okay, so I think last questions for Ibu Vera and for Ibu Nawal. So I think questions will be, what are your expectations and as well as concerns with regard to these IFRS sustainability disclosure standards in particular? So I'll start with Ibu Vera.
Thank you. I think sustainability reporting has been, I think, produced by bank for many years already. In future, what do we expect is no multiple standard, no overlapping, because the more, I think, the more efficient it helps, and the more practical it helps the journey for industry also to provide a better sustainability reporting. We do expect that, I think, today there are so many standards and framework that govern sustainability globally also, including governed by OJK, our regulators. So for us, from the bank's point of view, I think it has to be integrated. A single official reporting standard, it will be much better rather than we are facing multiple standards, because it will be very costly for industry and create confusion as well. So I think that's what we expect. I think for any disclosure reporting, one report is enough. We don't expect many disclosure, many model or many reports. I think what we expect is one report is more than enough. So I think I agree with Bunelli as well. Let's I think improving the reports, the quality of the reports, the content, including the quality of the disclosure. At the end, I think the awareness about this sustainable reporting is increasingly in Indonesia, including with our customers as well. So it has to be work hand in hand together with regulator. And I think, and also we have to also educate our customer. So I think that's more on I think what we expect from the sustainability reports.
Yeah, thank you, Bhavira. I think you convey consistent messages to avoid having multiple standards or requirements, so that to avoid confusion in terms of the preparers in preparing those reports. Okay, the same question for you, Ibu Nawal. What are your expectation and concern with this IFRS proposed standards on sustainability reporting?
I think I will focus on the expectation because some of the concerns you've already highlighted at the beginning. My expectation from this is that I'll echo Ibu Vera about the standardization. I mean, it doesn't help investors or other stakeholders to read multiple reports, different results saying one says A, another says B. It doesn't help anybody. And you need to have like a consistent barometer to measure this. Now, with that, I'm expecting also that the standard will give a framework to help people who are in this journey, address key questions about how the judgment should be executed. What are the critical factors? And this, I think you need to go sector by sector, in which the judgments will be different. Some items for one sector is more significant and material. Other aspect of sustainability for other sector will be more significant and material. And I think Sue already alluded to that it looks comprehensive, but from the preparer's perspective, you only need to focus on your reporting aspect. But nevertheless, having a good framework to sort of like define what materiality is, what significant is, what needs to be considered, because the businesses out there are complex. You have the single line businesses and you have the conglomeration, you have the one that sells output, but the feedstock comes from different angle. So giving a good framework on how to measure these is something that we are genuinely looking forward. Framework that also factors importance of the parameters to measure, but also address the practicality and timing of the reporting. So that's what, I mean, that's a bit of what we feel right now because of the agony of preparing this is different at different sectors. Having a standard that sort of like gives you that guide is paramount. So I'll stop here, Indra.
Yeah, thank you. Wonderful remarks from you. So I think I'll move on to pick up some questions from the audience. And at the end of that discussion, I'll ask each of you panelists to give some brief and final remarks before we close this panel discussion session. So I saw there are at least 2 questions. All of them are addressed to you, Sue. So I think I'll pick up those 2 questions. I'll read it to you if you cannot read it. So first question from Afdal Madain. So my question is related to the possible consequences of the future sustainability reporting standards from the ISSB that seems to focus only on the financial materiality, which is narrower compared to GRI's impact materiality, which has been globally applied. The negative consequences could be that IFRS sustainability reporting standard could motivate companies to diminish the sustainability information they disclose. For example, it could drive the situation that most the companies disclose only greenhouse gas emissions, and it lessens the information available. What do you think about it, Sue?
Well, I'll make 2 observations. First is that, yes, we are focused on a particular set of information investor needs, which is a subset of the total possible information, obviously. The first thing I'd say about that, though, is don't be fooled about that being very narrow, because increasingly what is interesting to the man on the street is interesting to investors, and it does affect enterprise value. So we see it increasingly with, I'm sure that Indonesia is no different to here in the UK, where increasingly customers and people, when they're working out who they want to work for, care about the behavior of companies. So it affects revenues, it affects whether you can get staff. It also affects whether a regulator is likely to say you have to change the way you run your business. And so it's very much the case that the behavior of a company affects its enterprise value. And so we find an increasing commonality between the information that, for example, GRI would be interested in and the amount of it that is actually of interest to investors. So don't think it's a narrow set of information. But having said that, of course, there is still a difference, which is why there's a different perspective for GRI and a perspective for us. I think Elko said it well, and our dream really is that we work in partnership to find this common set of information that is suitable for investors that would also be relevant to others as well. And then we clearly identify the incremental pieces of information that may meet broader stakeholder needs. And if we can get that partnership to work well, we've got the best chance of efficiency and effectiveness in the system, because it would mean that it would be quite a straightforward thing for a company to both meet investor needs for, financial reporting obligations, and with only a little adjustment to also meet broader needs. And so that's really the dream that we have, working in combination with GRI. That, both of the other panelists have spoken, I think, very well on the practical aspects, the efficiency aspects, the cost aspects. The more we can work in partnership with others to get the system to work well, the better for companies. And one of the things that was mentioned in terms of the banking side of things is this increasing amount of requests for information for regulatory purposes by prudential regulators, etc. One of the other things I'm doing, actually, I'm going to spend time with the Basel Committee this week, because we're trying to see if we can find ways to align what they're asking from banks with what we're requiring as well. So we're trying to find efficiencies wherever we can, because we really want people to spend time managing these risks, not pumping out numbers for reporting obligations. And the more efficient we can make the system, the more chance we have of doing that.
Perhaps this ties back to the approach taken by the ISSB, that climate first, but not climate only, right? Perhaps this is relating to the question asked by the audience on that. Okay, I'll pick up second question. This is still for you, Sue. Question will be based on your observation. How many companies in your country, or perhaps in Europe, that already disclose scope 1 to 3 of greenhouse gas emission inside the sustainability report? And how about the calculation or measurement of it? Is it required or mandated by the government? Do you have any observation on this, Sue?
Yeah, I think at the moment, most of the reporting for greenhouse gas emissions and sort of transition planning is still voluntary. I mean, there are moves in place. For example, the UK government is moving to some of this information being mandatory. Others are as well. New Zealand, one of the, where I originate from, is one of the countries moving to requiring this. But most regimes at the moment are on the path to being mandatory if they're being required, but they're not mandatory yet. And so I think while we do have the benefit of some companies having already voluntarily applied the TCFD recommendations and the SASB standards, etc., which means that they're on they're closer to what we're asking for in our exposure drafts, it's a relatively narrow population at this point, I think, who are providing this information, but it's increasingly asked for. So I think many are on the path to providing that information.
Okay, thank you, Sid. So for the interest of time, I'll stop here. And I think I'll ask each of the panelists to give brief final remarks on this matter. So I'll start with Ibu Nawal, then Ibu Vera, and last but not least, Sue. So please start, Ibu Nawal.
Yeah, thanks for this. I think I'll reiterate that we're genuinely looking forward for this standard to help us also navigate through the plethora of reporting standards that are available right now. We are optimistic that over time we will be ready to sort of like comply with such standards. Hopefully from the standards that are also understand and acknowledge the practicality consideration around implementing this to allow us also to be ready for reporting. That's from my end, but we're genuinely supportive and we genuinely look forward for this to materialize. And I think this will be a great breakthrough for reporting because it focuses on sustainability. It focuses on item that was not measured before in the balance sheet, in the income statement. It's not all financial. It's more suitable to the more complex world that we are living in right now. So for that, I'll conclude my comments, Pak Indra.
Thank you, Ibu Nawal. Ibu Vera, please, to give your final remarks on this.
Thank you. Definitely, I think we welcome any effort to improve the quality of sustainability reporting. However, I think the coordination together with regulator make it to avoid multiple standard, multiple framework, to avoid multiple different way of disclosure reporting, I think is highly appreciated by any industry. So I think, again, this is a journey. And talking about ESG, there's not only element of environment, social and governance are equally important. And the effort, I think our effort is not only looking at one side, but also I think the three of it is equally, I think, to be also disclosed, in which I think today, particularly banks have started from the governance, GCG reporting. We started there, I think, almost 20 years already. And more, I think today, the requirement of disclosure are increasingly, not only from regulators, but also from globally. So let's help also the industry to enter this journey, make it become more practical, but easy also for any new adopters. Thank you.
Thank you, Ibu Vera. So last but not least, Sue, please, to give your final remarks on this.
Thank you very much. Firstly, thanks for a really interesting panel. Really enjoyed the discussion. You've raised some really good points. From my side, of course, I would say, please respond to my exposure drafts so that we can really help you. And, you know, we are really, really trying hard to make sure that this is a reasonable ask of companies around the world, and we're trying to do everything we can to make it as efficient as possible. You can help us by supporting the global baseline. So that's my ad break. But my other request is, I think, you know, it's easy sometimes for people to look at documents and say, this is all too hard, and so I'm going to say no to this. And I'd really be keen if people could help us to be aspirational. I think to get good information and to have good investment decisions, we really need to be aspirational in terms of the information we ask from companies. We then need to be realistic about how long it might take and the journey that we need to go on. But if people could be sort of proactive in identifying ways where we can aim high, but be practical on the path, I think that would be really fantastic. And it would really help us, I think, get a good outcome for us all. And so I really encourage you to be innovative in your suggestions when you write back to me on how we can really try to get this to work well for us all to really get the best for the whole market. Thank you.
Okay, thank you. So of course, invitation to comments to all of you on the exposure draft of sustainability standards S1 and S2. Again, thank you for your time and insightful discussion and remarks on this panel discussion session. Sue, Ibu Nawal, and Ibu Vera. I think I'll close the session and I hand it over back to Monica. Thank you.